Generally speaking, an asset should be impaired when its fair value falls below its book value. That's how we do it. Let's now say that a company has overstated the fair value of an acquisition and consequently also goodwill. What you want to do now as an analyst is maybe to write down the assets that the company hasn't written down in order to see what will be the effect on the financial statements. The price of the acquisition, in this case, 129.4 million. The company estimated the fair value of the net assets to be 79.2 million. Goodwill, 50.2. The bad asset you want to impair is worth 72.4 million. Tax rate is 28%. So quite interesting. It seems like I have a lot of detailed information here. How can that be? Well, it's actually the case that this was the company EasyJet who acquired GB Airways in 2007. So GB Airways is like the company which had the Gatwick airport outside of London, the landing rights there, and some air planes as well. So EasyJet wanted access to Gatwick and bought this company. So what they got was some landing rights. We see them here. This is from the notes of the financial statements. Property, plant, and equipment. This will be like the planes and some other parts. So this is usually what you do when you do an acquisition. You do this purchase price allocation, PPA. Okay? You merge the balance sheet of the company that you have acquired with your own company. Basically, trying to find where do we put the assets and liabilities of the company that we have just bought. So in this case, a lot of planes, a lot of landing rights. The price, as mentioned, 129.4. So all the net assets that were identified composed of the number 79.2. So that was basically it. But they paid 129.4, so the excess of the net assets is now then recorded as goodwill. We put the goodwill in a basket like that. So goodwill, the extra amount that we paid for this company that cannot be allocated to any specific asset. So quite interesting in this case. This is what we see from the financial statements. Then there was some kind of dispute. This guy that stands beside the plane here is Sir Stelios. So he is the largest shareholder and also the founder of EasyJet. So EasyJet is part of a bigger group of a lot of these easy brands. But EasyJet is like the budget airline that they have then. In a statement to the stock exchange, Sir Stelios said that he was concerned about some accounting policies in this M&A transaction. He said basically that the assets from this takeover have been overvalued, especially takeoff and landing slots at this Gatwick airport and some aircraft as well. He said that there's been too optimistic assumptions about the future revenues, particularly in the current economic climate. He believes that slots in the future will be freely available, like landing slots, and he does not think that we should have these Gatwick landing slots as intangible assets on the balance sheet. Okay. So basically what he's saying is that the fair value is below the book value. So we can take this at face value and say, maybe we need to adjust the financial statements according to what Sir Stelios says here. So what do we need to adjust? Well, if he specifically says that the landing rights that was recorded as intangible assets shouldn't be there, and we think that the company hasn't written down these assets but should do, then we talk about delayed asset write down here, and we can do it for them. How will it look like in the financial statements? Well, of course, the intangibles will go down by the bad asset value. Will we see some other kind of effect on the balance sheet? The answer is yes, because assets equal to equity and liability according to this balance sheet equation. So if we only mix with the assets, assets won't equal liabilities and equity going forward here. So we need to adjust equity and liabilities as well. So it's quite easy to see what the adjustment will be if we look at the income statement. So if we write down these assets, some other expenses, like impairment expenses, will go up by the same amount. And if expenses go up, what happens with taxes? More deductible taxes. So we have less tax expense. Then there will also be this effect on the line item deferred tax liability. Taking this 20.3 from 72.4 gives us the effect on shareholders' equity as well. So now we basically have it, and in the end we can have a look at what's the profit impact. It's negative. So writing down this intangible asset, of course, creates a profit impact, but we need to recognize that the whole written down value doesn't drill down to the profit and the bottom line earnings. Instead, we have some tax issue in between there. Just looking blindly at some return on equity measure here, before return on equity was 6.5. Afterwards, 2.5. So definitely, maybe this was the correct return on equity in this year, which was the first year when EasyJet had merged with or acquired GB Airways.